Today is Sunday, May the 10th, and I want to take a look at Apple because there's so much going on with Apple since they released their last earnings, increased their dividend and their share buyback, and now they're coming up to their WWDC on June the 7th or June the 8th, and there's a lot of news expected to come out at that time. So I wanted to show you what the Ichimoku charts are saying about Apple, particularly on the 60-minute time frame. So if we look at the daily chart and we look at how far Apple has been from the cloud over time, it's a long time. If you look all the way back, it's a long time. We can look with our, with Motive Wave's bird's eye here, quite a ways back, and we see, this one isn't quite right, but we see the distance between the top of the cloud and where Apple was at 1472, and then lately we've seen $20.70 back in November, and we've seen $21.37, pretty much the highest that Apple has ever been away from the cloud without coming back and retesting for support. And that's exactly what happened, and it was the beginning of this bat pattern, and we saw the stock come down to this level, go to a 50% retrace of XA, actually 61.8, which is a perfect Gartley, isn't it? And then come down here within the Gartley parameters of 88.6%, again of XA, and then we saw it move up to here, where it just exceeded the highest limit of the projected D on the Gartley, and of course it came right back. So if you were trading on the Gartley, this engulfing candle told you that something bad was going to happen. It had completed the Gartley, and it was also a bearish engulfing candle of the prior day's doji candle. So what did we get in all of this? We got this high from the cloud, series of moves to come down and follow the cloud, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 days on the top of the cloud, fell below the cloud and recovered for a 12th, then took off and completed the Gartley as we looked at before. Then we came down and we pierced the cloud for 1, 2, 3, 4, 5 out of 6 days, which indicates that maybe the daily cloud is not the one to be focused on at this time, although the daily cloud is still showing upward mobility in the future. You see that on Friday we came down to a low of exactly at the top of the daily cloud. So from a daily point of view, we're showing upward motion in the future after having done all of this cloud testing and cloud support. But let's go back and let's look at the 60-minute chart. The 60-minute chart shows us something interesting. After completing this Gartley, we came down and moved through the 60-minute cloud with ease. When we did start to move up, look at this. We touched the cloud, 60-minute cloud perfectly, and that was resistance. Touched it again here, and that was resistance. Tried to pierce the cloud here, but ended up closing the day just below the cloud. This was a day on the cloud. This was also one. This was another. This one was where we came up, pierced the cloud, and were forced back down. So you can see now the importance of the 60-minute cloud. We go around the bottom of the cloud, and we've had this push up for the last few days right through the weakest portion of the cloud. The cloud on the 60-minute basis here has the very least resistance that a cloud could have at exactly that point. And that's exactly the point where price broke through the cloud. So are we going to go higher? Not necessarily, because we have a flat cloud here. We haven't yet shown signs on the 60-minute basis of a movement upward, but we do see a narrowing of the reversed cloud now where the span A is underneath the span B. That's why it's colored red. We see these narrowing, so we're going towards a position where we're going to turn yellow, where the A is now going to be on top of B, where it should be. Look what's happening to the Chico span, which is our secondary indicator. We're seeing the Chico span has been acting as a drag on this upward motion price here, and most recently here on Friday. So in order for Apple to come back up, we're going to have to see this Chico span break through the cloud, and where is it likely to do that? Resistance is high all the way through to this point here, which is May the 7th, but you have to add 26 days on top of May the 27th, and we'll be looking at an opportunity for both the candles and the Chico span to be free above the cloud. So over the next few days and weeks, let's keep an eye on this region here and watch it narrow, and then let's keep an eye on the 60-minute Chico span and see when it can break forward.